30 to 40 minutes going over getting a mortgage loan. Can everybody hear me? Okay, so we're not gonna go through everything because it'll take even longer. So I just picked some important things that I think will be very valuable to you guys when you get ready to go and look for a mortgage. One of the things that I tell my customers is that when you're going to shop for a mortgage, you want to go to someone that's in the city or in the same town where you're at. There's no reason to work with out-of-state lenders. I know they may say something about lower rates, no closing costs, but you got to think when they say no closing costs, what do they mean? A lot of times what they mean is they're just going to roll it back into your loan. You always want to go to maybe one or two lenders, talk to the person, connect to whoever you feel comfortable with, because you may be working with that lender for a while. So you want to make sure you're comfortable and always feel like you can ask questions. I just got through learning something brand new a few minutes ago. It is an ongoing learning experience. But one of the things I always like to go over first with my customers that's not in the program is when you get ready to go to a mortgage lender, make sure you start having your current pay stubs, current bank statements. You need your last 2 years taxes, like your W-2s is most important. You want to have all those things ready when you go in. Example, if you're going to a mortgage lender this month, they don't need your January pay stubs. They need the last current pay stub. They need your last current bank statements. So those are the things I try to go over with people and let them know, because I know a lot of times people are shredding their paperwork. So, okay, we're going to go through this, getting a mortgage, see what they're talking about. Of course, getting a home is realizing the American dream. And what I am going to go over is mortgage loan basics, qualifying for a mortgage loan, affordability and you, obtaining a mortgage loan, finding a lender, and comparing loan programs. I'm going to combine and condense all this. So if you have any questions at the end, maybe write them down now so we can discuss it later. So mortgage loan basis. Okay, you got to know the mortgage terms. Most of the time when you get in the mortgage, it's going to be 30 years. Always should be a fixed rate, fixed. You do not want an adjustable rate. Closing costs, loan fees, applying for a loan. Now, this is your team, your loan processor and the underwriter. They're working with your loan officer. There's people in the background that help us with getting your loan through the system. Even unfortunately, if you are not able to get it approved when you go to a lender, they should explain to you why in detail you are being declined and what you need to have done. And you have rights as a consumer. Always remember that. Okay. Mortgage loans basis, your house payment, PITI stands for principal, interest, taxes. Okay. And insurance. If you go to a lender, because sometimes I break it down and say just the initials PITI. If you're not sure what that is, say, excuse me, can you explain what that is? Because sometimes you forget, okay? Principal and interest payment, guys, are fixed. When you lock into a fixed rate, your mortgage for your principal and interest will not change. That's based on your loan amount, your terms, and your interest rate. Real estate taxes, that's the taxes depending on where you move at. That can change. It can go up or it can go down. Your homeowner's insurance, that can change. It can go up or it can go down every year. But the thing about your homeowner's insurance that you can't do with your taxes, you can switch and find another insurance company if you think it's going up too high. Now, your private mortgage insurance, PMI, private mortgage insurance, if applicable, usually you're going to have private mortgage insurance unless you bring in 20% down. Most loans have the private mortgage insurance. It protects the bank against foreclosure. It has nothing to do with your homeowner's insurance. That's separate. This is like bank insurance. Okay, there are some loans where you don't have it. Like I said, if you bring in 20%, or if you are a veteran and you do a VA or a USDA, if you're moving out to rural counties, they don't have mortgage insurance. Okay, condominium association fees. If you're buying a condo or a townhome, they have homeowners association fees. This is not exactly in your mortgage, but because we know that's something you have to pay, when you're getting approved, we're going to make sure you can be approved with the condo association fees. Usually, if you get in a condo, your homeowner's insurance is going to be a little bit lower because you just need to cover your insides. The condo association fees cover the outside of your condo. Okay, let's go. And like I was telling, interview local lenders, guys. I know right now a lot of lenders, we're not seeing face-to-face customers. We're doing it online or through the mail, but you can go. I'm having my customers like come in, dropping off documentation, or if they got a question they really want to talk face-to-face, we are now opening up the branch. And honestly, a lot of people a lot of people are referring to do it online. Okay, you choose a lender and you apply for a loan. Get a lender pre-qualification, very important. Before you go out looking for a loan, you need to get a lender pre-qual letter. A lot of times, realtors do not want to take you out unless you have it. Sellers do not want to take their properties off the market unless you have it. Basically, what a pre-qual is, you will know exactly what your loan amount is. You will know how much you may need to bring in at closing. You will know what type of loan you're getting. If you're getting grant money, you will know all these things so you can be prepared. The worst thing to do is go out, look at a house, think you're going to get it, and find out you cannot go that high. So you need to get that done so you'll know exactly what you're looking for. Provide documentation for loan processing. That's to get pre-qual. What most people do now, we ask for your income documentation. We ask for your bank statements. We want to make sure that we're doing the pre-qual based on your income, based on the documentation we have. The only thing that may happen later on, depending on how long it takes you to find a home, you might have to send in updated documents. Okay. Your underwriter guys are the person. Oh, and let me back up to number 4. Once you do the pre-qual and you get a home, then you go to loan processing. That's the person who's getting the file ready to go to underwriter. If your lender missed something, we try to get it in processing as well. Then you go to the underwriter. What you do when you go to the underwriter, you want to make sure you have as much as possible for them to review. You don't want them to have to suspend the file, which means that something's not right, they didn't have everything, or something's missing, or you don't want them to have to look at your file 4 or 5 times. So what we try to do is get mostly everything in, okay? And also, usually, guys, your credit report is good for 120 days. Your pre-qual letter is usually good for 90 days, okay? And then if everything goes okay, we move on to closing. That's when you do your loan closing. Okay, qualifying for a mortgage loan, the 4 C's of credit: capital, capacity, credit history, and collateral. Hold on for 1 second. Okay, capital, they're going to look at assets and reserves. Since COVID has been out, as you remember last year, the beginning of the year, because of COVID, a lot of people were losing their jobs, or they were being furloughed, or the hours are cut. Well, sometimes what that meant was they were behind on mortgages and rent. What they're asking for customers now, they used to always ask before, but now they're kind of strict on it. They're asking for reserves, meaning that if your house note is $800, before you close, they may ask that you have $1,600 in the bank for reserves. You do not have to use it. You do not touch it. It's just letting the underwriter know when you close, Sharon had 2 months of her house note in her savings or checking account. So if something happens, she had backup. Okay, that's what the reserves are. They look at your assets as well. Capacity, can you afford this house? They look at each loan program have certain ratios that they look at. They look at your debt to income. They want to make sure what your gross monthly income is and your monthly debts, any debts that you have on your credit report, plus the house note is not taking you over. Example, you might be trying to get $150,000 house, but I can only get you approved for $135,000. That's what your pre-qual is going to be. That's the things that you would like to know. Your credit history, they usually go back 12 months to 24 months on a credit history. If there are any things like maybe you got a small medical bill or you got some kind of negative credit on there, we always ask for you to write a letter explaining that. So when the underwriter is looking at your file, they're also looking at that letter explaining what was going on. And we want a short, straight to the point letter. You don't want a 5-page letter explaining one thing, because keep in mind your underwriter is looking at several files. And then they're looking at your collateral, which usually is the house. And when I want to go back to capital, what I always tell my customers is you have to, depend on what you have in assets and depend on what you have or what kind of home you're trying to purchase will determine if you can get approved or not sometimes. And what I mean by that, if you're trying to do, let's throw out a number, a $300,000 house, they're going to want to see that you got more than $1,000 in your checking account, because what? Your mortgage payment is going to be over $2,000. Okay. And if you buy a $300,000 house, you basically have to have maybe 4,000 in reserves. Those are the things they're looking at. And always keep in mind, you guys are the ones paying for the house note. You are looking at that house. You need to be comfortable with that house payment. It may look good that you can go up to $150,000 a month, but keep in mind, you're going to have a mortgage payment along with that. Do you feel comfortable paying that much? Don't feel like you have to, or you're forced to get a higher sales price and you're not comfortable with it. Don't let anybody talk you into it, okay? Keep in mind that some people get, based on their commission, is based on how high you go. I always tell people this may not be your first house. I mean, your last home. You might decide, hey, I'm gonna get a smaller home now, then I'll move to a bigger house. You need to keep those in mind, okay? Okay, let me skip down. Like I said, I'm kind of skipping around. Okay, qualifying for a mortgage, continue. Your down payment, very important. You need to know how much down payment you need. Usually with first-time home buyers, it's 3.5% or 3%. Are you eligible for grant money? You need to find out, hey, am I eligible to get some grant funds? And are those grant funds going to be around when I get ready to close? Upfront loan fees. Are there any fees that you had to pay out of pocket before you close? What are the bank fees? Closing costs and escrows. Escrows are for your taxes and insurance. You always want, most of the time when you are a first-time home buyer, you will escrow your taxes and insurance. Some loans will not let you close without doing that. And if you're getting grant money, they usually want you to do that. And one of the things, the reason they're doing that, guys, is sometimes it's easier to already have your taxes paid for at the end of December instead of trying to come up with 1,000 plus to pay for your taxes. And the same with the insurance. Reserves, we talked about that. That is whatever your monthly house note is. They may ask you anywhere from 1 to 2 months. I usually just say 2 to be on the safe side. And moving expenses, I really don't know why they got that in there, but you got to get that in calculation too. How are you going to move after you close? A lot of times they want you in the house at least 30 days after closing. Okay. All right, hold on for a second. Okay, there go, guys. They're going to look at capacity. They're going to look at your current income. They're going to look at your income history. future earning potential. They're going to look at your credit report. They're going to look at the amount owed, installment versus revolving accounts. Anybody know the difference between installment and revolving accounts? I think you guys are on mute, so I'll go ahead and answer. Installment accounts are loans or that you will pay off when you pay them off. Meaning that if you got a car loan, that's an installment loan. Student loans are installment loans. Personal loans, meaning that when you pay those accounts off, they are paid off. A mortgage payment is an installment loan. Revolving accounts means that you can pay it off, but it's still open. Like Macy's, Dealers, Pennies, those are revolving accounts. And any other monthly debt, some people have to pay the IRS back. Some people have to pay child support. What I have learned since I've been doing this, if there is a payment missing on your credit report, you need to go ahead and let them know, hey, I got a car note that I just got, or I got a IRS bill that I'm paying for. You need to let them know because a lot of times those things come up. They are going to run your credit guides before you close again. They will run your credit report again before you close. I always tell my customers, do not change anything. If you got a serious card and it's only got a balance of $200, you want to keep it that way. You don't want to go charging up to $1,000. You do not want to be late. You do not want to be running having a lot of inquiries done on your credit. Okay, those things can hurt your credit report, hurt your credit scores, and when they run your credit, they're going to ask you about it. Okay. And then qualifying for a mortgage, the thing they're looking at your credit guys, do you pay your bills on time? How much credit are you utilizing? Like, are you maxing out your credit cards? Are there any blemishes such as collections, judgment, liens, etc.? What combination of debt do you have on your credit report? How many installments, how many revolving? Sometimes if you have less than 10 months on an installment loan, depending on your overall credit, we may not have to include that in your debt ratio. So if you got a car and you got about 8 months to go on there, depending on how high it is, and like I said, your overall credit and your debt to income, the underwriter may say, okay, we won't have to put that in their debt ratio. And you might be able to get a higher price loan, but that has to be approved by the underwriter. Okay. 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 And collateral, like I said, it's going to be the house. Is it worth purchase price? Is the house moving condition? Inspection, inspection, inspection. You want to do a building inspection before you move in a house. And if possible, you want to be there when they do the inspection, or you want somebody close that you know that's going to be looking out for your interest there. The reason why is because you want to do some negotiation. You can't look at a house and say, oh, it's in good condition. You got to check the wiring, the electricity, the roof. You don't want to buy a house and the next month you got to put in a whole new roof, or you got to buy a water heater, things like that. You want that checked out. And if there's something that needs to be done or taken care of, your realtor can negotiate with the seller about, hey, who's going to fix what? Okay. And usually what I do for my customers, I do not order your appraisal until you do the inspection. Because once the inspection is done, of course, you don't get that money back. But you have to look at it this way. They may have saved you thousands of dollars, where you're paying a couple of hundred, maybe a little bit more, be honest, to do the building inspection. So they have done their job. But at least you won't be out the appraisal and inspection. So the appraisal is $450. Let's just round it up and say $350 for inspection. So that's $800. At least you won't be out $800. We'll just wait until you find a house and you and the sellers can agree to repairs. Is the house structurally sound and safe? I've been doing this 20 plus years. And I have to say, of all my years I've done that, I have only had 2 houses that was not structurally sound. Okay. One person was looking at the house, and when the inspector got there, he just stood on the outside and said, this house is sinking. Okay. No matter what they had offered, the buyer was not going to take it. Okay. The other place was, the other one that I had was the inspector told them, you need to get an engineer out there. And I can't remember who paid for the engineer. I think it might have been negotiable between the seller and the buyer, but it was some things that the inspector was concerned about, that he wanted them to get an engineer report. So those are some of the things you look out. And like I said, the first person, when they found out the house was sinking, it was like, it's no point in them going any further. Okay, hold on for a second. And sometimes when you get grant money, guys, depending on who you're getting your grant funds, they want to see the inspection. We do not have to see the inspection. All we need to see is the pay receipt. And let me just back up for 1 second. You have to have at least $1,000 of your own money in the deal. That's 1,000 plus reserves. Your $1,000 can include the earnest money, what you put down on the house. If you're getting grant money, the workshop, how much you pay for a workshop. Some of the workshops are free and some you have to pay. Your building inspections and your appraisal, which is usually $450. All that can total up to 1,000 plus. As long as we can verify the earnest money and the appraisal came through your account, then we can give you credit back to that of that. Okay, so that's very important. Why you have to, it's good to have a bank account, because you got the statements to prove it. Okay, affordability and you, we're going to look at your housing ratio, maximum amount of gross monthly income that will go towards the monthly mortgage payment. And that's what I was saying, guys. It may look good on paper that you can afford a 100 plus house, but in reality, you may think I should keep it down at 80, because I want to have, you're going to have a house note, you're going to have repairs. So that's some of the things you should look at. And then we're going to look at your debt income. We always look at your gross income, because honestly, that's what you earn, but that's not what you really take home. Okay. And again, we're going to look at the mortgage payments. Certain loan products, well, not certain, all of them have a guideline you have to go through. If you're trying to do a FHA, they kind of have loosened up. Let's just say you're over 48%. If I can get a SEP on the system, a desktop underwriter, we may be okay. But on a conventional loan, which is a bank loan, you cannot go over that. And that's something that when you get your pre-qualification, that your lender can let you know. Okay, hold on for a second. I'm skipping some pages. I don't know if we can have somebody ask questions. Anybody got a question? Or you guys want me to continue?
If you have any questions, just go ahead and unmute and ask, or either put them in the chat, because I don't see anything in the chat.
Would grant money, like, is that an example, like a VA loan or something?
Well, but grant money is separate. Grant money, depending on who you're getting the money, they may give you $3,000. A VA loan is separate. VA loan is a loan product that veterans can use. It's 100%, meaning that you don't have to come in with no down payment on a VA loan.
What's a grant? What's grant money then?
Grant money is like, have you ever heard of some of the age? Let me give you two. Have you ever heard of Beyond Housing or the Housing Partnership? Have you ever heard of those two?
No.
Okay. They give out grant funds to buyers depending on your income and household funds. Like we have one that gives you $7,500 down payment if you meet the household requirement. You always got to do a workshop to get the grant money. Okay. Like we also have a $2,500 subsidy from Central Bank that can go towards your closing costs and prepays. And you can use that with Beyond Housing or the Housing Partnership or the Federal Home Loan Grant. Those are 3 people we work with. So your lender, usually lenders would tell you if they work with a housing agency, or when you get ready to go to a lender, just ask them, do you work with any of the housing agencies that give grant money? Usually the first things, when somebody tell me that they are a first-time home buyer, the first thing one of the second things after we do the credit report is look at their income and household to see if they're eligible for grant. And usually the only thing you have to do is take the classes. You usually could do it at the agency, but now with everything going on, they are all online. And then you do a budget. You fill out a monthly budget, and the grants are usually forgivable after 5 years. As long as you stay in that house for 5 years, it's forgivable. So if you're interested in finding out about the grant money, you need to make sure you let your lender know. You do not want to wait until you get a sales contract and say, hey, do you have grant money? As soon as you call the lender, say, hey, do you have grant money? So you'll know if you're eligible for it. Does that answer your question?
Yes, thank you. That makes sense.
Okay, sure. Yeah, because I've had people call me that's with another lender getting ready to close, asking if we have grant money. And I'm like, yes, we have grant money, but you have to get that loan with that lender. You can't get grant money and get a loan from someplace else. It all has to be at that same lender. That's why I'm saying don't wait till you get ready to close, because they didn't say anything to the lender until they got ready. They got a sales contract. Okay. Any more questions?
Yes, hi. I wanted to ask,
Hi.
are there, this is very helpful, by the way. Thank you for sharing the
Oh,
information.
great. Okay.
Yeah. Are there other private grants that you can get outside of the lender?
Yes, those were the ones I mentioned.
Okay. Well, I'm sorry. I think I was thinking kind of like, how scholarships or grants for college is so many different organizations
Oh,
that do
yeah,
that.
it's not that many now.
Okay,
It's only a few. I'm gonna call out the ones I know. Beyond Housing, the Housing Partnership, Better Family, and the Federal Home Loan Grant. And then there was Missouri Development Commission. Has anybody heard of MHDC?
Yes.
Okay, they give out 4% of whatever your loan amount. That's another grant. So it's maybe like Beyond Housing, like 5 down. Honestly, when I started, it was like 10 of them. But it has narrowed down. It's like 5. And you can only get it from one agency, meaning that you can't use Beyond Housing and then want to go to Better Family. You can't do that, or go to House. You can't combine it, what I'm trying to say. So you have to pick and choose who you would like to use.
Great, thank you.
Okay, no problem. Any more before we continue on? Okay. Affordability, and you continue. Okay, with calculation using affordable ratios, we're going to determine how much of a loan you can get. And guys, another thing I would like to explain to you too, when you go to a lender, they should explain to you why you're doing a certain product. Like I said, a conventional loan is a bank product. FHA, Federal Housing Association, is a government loan. 2 different loan products. They need to, that's basically what most between the 2 first-time home buyers do, and VA. Let me put VA in there. Of course, VA is for a veteran. That's something they're entitled to. Most veterans want to do VA. Okay. Then you got, like I said, conventional FHA. They should explain to you why you're doing a certain product. Usually, like the main difference between conventional and FHA, they're both, all of them 30 years, they're both fixed. They both going to have private mortgage insurance. But on a conventional loan, private mortgage insurance will go away quicker after you pay down 20%. FHA, it used to go away. It just took longer. But now, after that 2008 recession, when everything just went haywire, FHA decided, hey, I'm keeping the PMI in the loan for 30 years from now on. It's not a bad thing. Sometimes it's if your credit score is below 680, it's easier to get approved for FHA. So we do have loan products for conventional for first-time home buyers where you can go down to 645 on a conventional. It doesn't have to be 680, but sometimes getting approval on a conventional, like if you had a bankruptcy, even if it's discharged, you may not be able to get approved. Or if you have a lot of student loans, you may not be able to get approved. So I might have to go ahead and put you in FHA, but I do explain to people, I couldn't get you approved for a conventional, but I got you approved for FHA. You need to know why you're in a loan product. Just don't let somebody tell you you're going to do this and this it. They should explain it to you. Okay. What else was I going to say? Oh, how much will the lender loan you? What purchase price can you afford? Got to know that down payment, how much of the down payment is going to be, and are you going to get any grant money? And something that's not in this package, gift money. You can get any type of gift money on any type of loan product from your family members or significant others. Okay, they just have to sign a donor letter saying, hey, I'm giving Jack Jones $1,000. I'm his Uncle Roy. Fine. That is not a problem. Everybody does that. It is good. The issue comes up when you have to tell that donor, that's the person who's giving you the money, that we need to see their bank statement. And FHA is really strict about that. The reason why, guys, is not that everybody's trying to be nosy. We have to have a paper trail. We got to document the funds. We need to see that Uncle Joe, that money came from his account and he gave it to niece or nephew. That can be a very touchy subject to some people. First of all, they say, well, I'm giving them mine. Now I got to show them my bank account. No, or I don't want them to know how much I have in there. We need to know if that's going to be an issue before you get that gift money. And a lot of times people say, oh, I'm not going to get for anybody, but you never know. Somebody might come up there, might be a fairy godmother you didn't know about. But we have to document that. So I just tell people, do not put that money in there, because if there's any money deposited in your account and we can't document it, it could delay your closing. Okay. So I always try to get that over first, because that can be a very big game changer. Okay. Then we're going to estimate what your total monthly payment. We can kind of tell you what the interest, the principal and interest is going to be, but we're still estimating that because we don't know what the rate's going to be when you get ready to close. It might take you 2 to 3 months to close. Taxes and insurance, we're guessing on. I have come pretty close because a lot of time your insurance is going to be based on your credit report. And then taxes, I kind of ask people, where you plan on moving, just so I can give a rough figure of what your taxes might be. Okay, so that's everything is going to be estimated. And then when you find a sales contract, when you find a home, that's when we can put in the true figures. Okay, hold on for a second. Okay, obtaining a mortgage, you can get it from a bank, a mortgage banker, credit unions, or a mortgage broker. But you always just want to make sure you get it where you live at. Okay, that's basically what I'm trying to tell people. A lot of times I know these commercials say, oh, you can sit at home, put on your pajamas. Well, you can do that too now. You can just go online. If you just one of those people that just want to stay at home and do everything, that's fine. You can do it online. The reason why sometimes we're telling you to get a loan where you live at is because some of those out of town lenders would not give you grant money. Okay, and some of the grant money people would not work with out of town lenders. And if honestly, if it sounds too good to be true, it probably is. They may say, oh, you don't have to bring in any closing costs. You don't have to pay anything. You don't have to have $1,000. Okay, whereas my closing costs might be $4,000. Their closing costs may be $10,000 or $12,000. They got extra closing costs in there. So yeah, no, you don't have to bring it in, but you paying maybe additional $5,000 on the loan or more. So that, and also, like I said, sometimes you may want to go in, make an appointment and talk or drop off forms. It's just easier to me personally. And like I said, you get your grant money. So keep that in mind. Okay. Okay, obtain a mortgage. Okay, government agency, government sponsor, FHA, VA, USDA, rural development. Like if you're moving in Jefferson County, that's usually for USDA. Fannie Mae and Freddie Mac are the investors that usually buy loans. We usually have to go whatever they're telling us what to do. Mortgage brokers, the state agencies, MHDC, Missouri Housing Development Commission. We used to do MHDC. We're not doing it right now, but we have other grant funds. IDA, which is Illinois Housing Development Agency, is like MHDC, but you buying a home in Illinois. And assistance programs, when we tell you that you have to get a home buyer certificate from a HUB approved agency, this is what we're meaning. What does HUB move? Housing, urban development. Yeah. Oh, thank you. I got that. Okay. They have to be a HUB approved agency. Banks have loans too. Like we have, like I was saying, a conventional loan. We have portfolio loans. They have loans for, they do have adjustable, but it's so rare. I could count on one. No, I know I've only done one adjustable rate loan in my years of doing this. And it was so long ago, I probably have to get instruction. The only reason my customer was doing adjustable loan, he had a job where he moved every 3 years. Every 3 years he was moving, and he knew he was going to be leaving St. Louis. Okay. Okay, got that. What time is it? Okay, I'm on time, aren't I? Okay. Obtain a mortgage loan.
Yes, you have an hour, so you're good.
Oh, okay. All right. Shopping for a loan, inquire with Urban League or any HUD approved loan, or ask your bank. Okay. Prosperity Connection, somebody else. Agencies for reputable lenders or programs. Check with your bank or credit union. Ask for referrals from friends and family. That's where I get a lot of my referrals from. Okay. Hold on for a second. And then, like I was saying, find a lender, look locally. Interview multiple lenders to determine rates, loan estimates, and loan recommendations. Usually, guys, you can't get the loan estimates until you honestly have a sales contract, but they can tell you, break down like what their fees are. The rates, we can tell you what the rates look like today or tomorrow, but keep in mind, I've had people call me and say, well, so-and-so say I can lock in at this rate. Well, do you have a sales contract? No, I don't. Well, I can tell you what the rate is today, but it may take you another 2 or 3 months before you have a sales contract. I won't know what the rate is. If I had that kind of vision, I might have a bigger job, a higher paying job. But no, I can't tell you what the rate is going to be. I can only give you an estimate. The rates are low. They are at low rates right now. So that's a good thing. But I think back in January, I had people's locking in at like a 2 point something. Right now it's in between 2.875 and 3, but now it's you might have to pay for that 2.875. It just depends. Okay, evaluate a loan officer response time. If you call a loan officer on Monday and they don't get back with you Friday, and if it's not something that emergency came up or what, you might want to look, and don't wait till Friday, look for another lender, especially if you call a second time. I personally break down my day. I leave on my voicemail. I might say, hey, I got a 10 o'clock appointment. I'm out of the office at 3. I got a 1 o'clock appointment. So you would know if you call me at 9:45 and I said I had at 10 o'clock, you may, oh, well, she's getting ready for her 10 o'clock or she has left for 10 o'clock. You know, I am pretty good at returning my phone calls that same day, if not that morning. Okay, so those are things you want to look at. How long would it take to process and underwrite a loan? And I always tell my customer, it also depends on you. We can close a loan in 30 days. But honestly, if you are getting grant money, you need to make it 45 days because you're not just working with your lender, you're working with that housing agency. And it's some things that are detailed. And what I tell my buyers, if you're getting grant and we see that you meet the income requirement, don't wait until you get a sales contract to go do a workshop. Don't wait until you get a sales contract to do a budget. As soon as you get that pre-qual, you call, or you go online and do the workshop, or you call the agency and you do the budget. Simply because you're going to have so many other things to be worried about. You want that done and out the way. That's the best thing. Okay. I had someone that, yeah, I got a lot of stories. I told them to go ahead and do the class even before they even got a sales contract. I said, oh, you do the class, when they will call and ask me something. And they never did. And so soon as they got a sales contract, they went and did the class. And there was something, I honestly don't remember why they couldn't go in to do the class, but they were doing it online. And unfortunately, that agency, they had some kind of website issue. They were down for about a week on the website. I mean, you just never know. That was very last minute. So she felt really pressured to get that class in. So I just tell folks, go ahead and get those little things out the way. Because when you get that sales contract, you got to get your homeowner's insurance, you got to get your inspections, you got a lot of things going on. Okay. What was I going to, I was getting ready to say something. You can tell I've been doing this a long time because my mind is getting numb. What was I getting ready to say? It was right at the tip of my tongue. I'm sorry. It'll come back to me and I'll just break it up and say something there. Okay. But it really depends on how long it takes you to get your documents in. The good thing about going online with us, you can submit your documents when you go online. And if you like me, even though I do this, sometimes I can do it and sometimes I can't. Your lender should give you different options. You can either scan it to my direct email, you can drop it off or fax, or mail if it takes, for some reason you can't do any of that. But they should offer you different ways of doing it. So it really depends on how fast you get your paperwork in. But going back to the process, you can close a loan in 30 days, but if you got grant money, that's very unusual. You got to keep in mind for your inspections. If the seller's got to do some repair work, that's not your fault, but it might take a minute or two to get something done, especially if you close in the wintertime. If they need to paint something on the outside, well, they can't do the painting until the weather gets better. And sometimes, depending on what needs to be done, you can escrow that repair, meaning that the seller's going to do the repairs, but the money that they need, the money that they are putting aside will be held in a title company at an escrow account. So when the weather breaks, like, of course, you can't put a roof on if it's snowing like today. Who knew? But you can't put a roof on the wintertime. But you want to close. So depending on that loan program, the title company could hold, but the seller will have to get the exact bids. So they'll know exactly how much it's going to cost to get the work done, because you do not want to go to the title company and the roofer tell you, hey, it's $5,000. They only left $2,500 in there. So they would have to have the exact amount in there. How is communication with your loan officer? When you talk to a loan officer, do you feel like you bothering them? Do you feel like, oh, I don't want to call because I called them yesterday, or I don't want to call because they told me this already and I can't remember? When you go to a lender, when you first start, that is a whole different situation when you get a sales contract. When I meet with my customer, we go over everything to get them approved. That's the main thing. Then we go over everything to remind them what they need to do to keep their credit the same. So when they get a sales contract, when they get that contract, your lender should just go ahead and say, hey, Sarah, don't forget now, you got to do your building inspection. You got to do your insurance. We don't expect you, or a lender should not expect you to remember everything, especially if you hadn't been in their office like 2 months ago. Sometimes it takes a minute to buy a house. You should be comfortable in talking to your not your realtor, to your lender, asking questions. I am not a real estate agent. Your lender's not, so I cannot talk to you about real estate, but I can talk to you about lenders. Okay, anything that's got anything to do with lending. If somebody called and tell me, hey, I don't know if I want to do an inspection. No, you want to do a building inspection. Okay, you need to find out what is going on with that house. Okay, so things like that, I can help you but it's so important to feel comfortable with your lender. And are they following up with you? Like last week, I was following up with some customers that has been in my pipeline for a little while. And I'm just trying to find out what's going on, what you're doing. Are you still looking? I had a customer that was, the spouse was ill and they got better. And I hadn't heard from them in about 2 months. And I called and the spouse is back ill again. So like I told them, take care of yourself. When you're ready, just come on back. So that's just keeping up. And there's nothing wrong with you calling your lender and say, hey, I just want to let you know I'm still looking. I'm just not finding anything. Okay, so let's move on. Oh, I think I pretty much answered number 7 already. Is your lender patient and do they answer all of your questions? Do they help educate you about the lending process and expectations? Okay, if I don't know, and I don't know everything, I've been in this business 20 something years, it's always changing. Or if I'm not sure about something, I do not have an issue with going and ask because I'm looking out for you. I'd rather tell you, hey, I'm not sure about that. Let me get back with underwriting. Okay. So a lender and you should be able to talk about things. I mean, you're not going to get personal and all that, but you should feel real comfortable because sometimes it can be a hard process. It can start off easy. It can get hard. It can start off hard. It can be easy. You go through so many changes when you're buying a house. I'm just going to be honest and just be prepared. Okay. When quoting rates and fees, give all the lenders the identical scenario. Yes, if you're going to shop around for a lender, don't tell them different things because you will get different answers. Even if that means writing it down so you'll know. Let them know the same thing you're telling another lender so they can give you what they have going on. Okay. Be cautious with lenders recommended by a seller or the seller realtor or an interested party in the purchase. It's always good to have an agent, a real estate agent working for you. You definitely want your own inspector, not the inspector that the seller had. And you also, the appraisal, that's not even an issue. We take care of the appraisal. Nothing has to do with the seller. But you just want to be careful, okay? You always want people who are interested in your well-being or what's going on with you, okay? Not a side issue. And there are agents that is the seller and the buyer. I haven't had an issue with that because I am always going to look out for whoever my customer is, okay? Make final comparison and choose a lender you feel comfortable with. This is what I was going to say. When you are shopping around with a lender, guys, everybody does not have to run your credit report. I know it's a thing where if you do a mortgage credit check, you can do it within the same week or the same 7 days. It's something like that where it won't affect your credit. You should be able to call a lender and say, hey, I'm Joe Black. I'm looking first-time home buyer. Do you have anything for first-time home buyer? Immediately, if the lender got something, they should be able to tell you, hey, we got 2 or 3 different loan products that we can use. We work with the housing agencies. We got grant money. Those are the things that can just come right out. I should not have to run your credit report to tell you those things. Okay, you just tell me what you're looking for. I should be able to tell you what's going on. And I can tell you what the minimum credit score is. The minimum credit score is now at 645. All right. Then you, like number 10 said, make comparison and choose a lender you feel comfortable with. I've had people call and say, this is so-and-so, here's my credit, here is my social security number. I don't even write it down. Sometimes you can talk to someone and you don't even have to do a credit check. They can't do it right now. If they had a foreclosure a year or two ago, they can't do a mortgage now. They got to wait exactly 3 years. If they're in a bankruptcy and their discharge is just a year and they had a Chapter 7, you got to wait exactly 2 years. The only time I will run a credit report for someone that tells me they're still in the bankruptcy, if they're checking on their credit. And that way I'll just do a soft pull. So that's why when somebody call, I'm going to call you first to see what's going on before I run your credit report. And then sometimes I can talk to people and depending on what they tell me, I just immediately refer them to Prosperity Connection because there's some things on there they need to take care of before they can purchase a home. Okay. Required down payment. Some people can tell you what they want to put down if they have the money or what they're trying to do. We try to find a product, what they're trying to do. If somebody tell me, oh, I got 10% down and they got good credit scores and they'd say, oh, I want to do FHA. I might ask, well, why you want to do FHA? Because you're putting 10% down. Eventually your private mortgage insurance is going to go away. And so a lot of times people say, oh, I'm doing that because my parents did it. Well, years ago on a conventional loan, you had to have a credit score of 680 or higher, and you had to bring in 5% or more. It's not the same right now. And so sometimes I have to explain to people it's not the same way like it used to be years ago. Your total closing costs, your upfront costs, your interest rate, meaning the interest rate you are locked in at, what your monthly payment is going to be, and your annual percentage rate. If you guys have heard, the abbreviation is APR. That's the rate that's based on your closing costs. That's not the rate that's based on what you'll be paid monthly. That's your interest rate. And then your payment. You won't get, like I said, you don't get a final payment until we have your sales contract, because then we have to know what your taxes and insurance is. Okay. And these are the type of loans, guys. I don't know why we got home equity loan in there. That's when you have a property and you get equity off your property. Fixed rate, always fix. You do not want to do adjustable rate. Adjustable rate changes. Years ago, adjustable rates were lower than a fixed rate. It's not like that now. A balloon mortgage. Now, I have never did a balloon mortgage. A balloon mortgage is similar to an ARM loan, but on a balloon mortgage, you have to pay that off when it's due. If it says 5 years, unless you refinance, you got to pay that mortgage off. It's 5 years. I've never done a balloon mortgage. I really don't see a need of doing it, but it's still out there. Okay. Okay. Any questions so far? Anybody got anything?
There's none in the chat.
Okay. All right. I think where we at? Hold on for a second. Some of these things, honestly, guys, I had went over. Oh, give me a second. Mortgage terms. I think my page fell out. Oh, here it is. Okay. Loan to value, your LTV is depending on your down payment. If you put 3% in, that's a 97% loan. If you put 5% in, that is 95% loan. It depends on how much you're bringing in. Debt to income ratio, your DTI, your debt time plus your house note and your debts. Prepayments, it's not too much of that going on. A prepayment was if you paid off your mortgage, and I know it's weird, they could penalize you for paying off a mortgage early. Like if you had a 30-year loan and you paid it off in 15 years, lenders could charge you points for doing that. They don't, it's not, well, you know something, let me back up. We don't do that. And I don't think a lot of other lenders doing it either. Points. You can pay points to buy down a rate, and points could be different. I'm trying to think. I had somebody that brought down their rate like last week, $300. They were refinancing to get a lower rate. They paid $300 for, and it was worth it. They was going to save a nice sum of money. But that doesn't mean you always have to do that. Okay. Sometimes there might not be a points. Long terms, first time home buyers, 30 years is usually the term, okay? Rate lock-in versus floating rate. When you do a rate lock-in, that means you got a sales contract. I've called you and say, hey, we got a rate is 3% today. Do you want to lock in? You can tell me if you want to lock in or if you want to float. And no matter what, people always say, do you think it's going to go down tomorrow? I do not know. I do not know. It could go down. It can go up. It can stay the same, but it may cost you a little bit more to buy that rate. It just depends, okay? So it's up to you what you want to do. But floating rate means that you have not locked in. You're just floating in to see what the rates are going to be like. But you do have to be locked in 10 days before you close. It's a compliance. You do have to be locked in then. Your annual percentage rate, like I said, your APR is based on your closing costs. That's what you get at closing. Your escrow account, guys, is your taxes and insurance. They're gonna pay, you're gonna pay for your monthly taxes and insurance. It's gonna go in the escrow account. And like I was saying earlier, it's so much easier to have your taxes already paid for during the year, put in the escrow account. So when it comes due in December, your lender usually takes care of it. The same with your insurance. When your insurance come due, depending if you close today, April the 20th, your insurance will come due next year, April the 20th, 2022. They will send the mortgage company a letter saying, hey, the insurance is due. They take it out of escrow. It is so much easier. This way, you know your taxes and insurance is already taken care of. Okay. Mortgage terms. I think we went over these, but I'm gonna go over again with you. Private mortgage insurance, PMI, protects the bank against foreclosure. Your closing cost is your fees, your bank fees, and the title work, the title company fees. You always close at a title company for a purchase, okay? Your title company is usually somebody that your realtor picked. They usually have title companies that they work with. We used to be at the title companies when they close. We used to do our own paperwork for closing. When I get through with you guys, I got a closing this week. I'm going to go over the paperwork with my customer tonight because now they only want the signers there, or they're going to do curbside. So what I do is I get my customers their closing docs so I can go over it so they won't be anxious or feel like they're being rushed when they're at the closing table. And with everything going on now, it's a safety issue, okay? Your prepays is usually what they're gonna put in escrow for your taxes and insurance and your interest. Your loan estimate. When you get a sales contract, we are going to do, our operations will do a loan estimate breaking down what your closing costs going to be. So you can have an idea of what you might have to bring in at closing, okay? Your closing disclosure is what you get a week before you close. 3 days before closing, we got to give you a closing disclosure that will have your final figures of what you need to bring in. It breaks down all the fees, the bank fees, the title fees, all your credits, like your earnest money and your appraisal fee. And I don't think I explained, I think I explained about the $1,000, but your earnest money and your appraisal fees, guys, that can be credited back to you. Like if, let's just say when we get through with the figures, you have to bring in $1,000 at closing. We credit you back $500, that's usually the amount of money put down. $500 for earnest money, okay? So we give you back that credit. That is $500 left. $450 for the appraisal. So now what do you have to bring in? $50. That's how that works. It doesn't mean you're gonna get that cash back. They're just gonna take off what you owe or what you had to bring in for closing. They would just deduct the earnest money and the appraisal. But the thing of it is, we have to see that money clear your bank account. So that means we're gonna have to get new statements. So that also means if you deposit any money in there that we can't verify, that oops, that's another question coming up. Okay. Amortization schedule, that's a breakdown of exactly how your payments are being done, meaning how much is going to interest, how much is going to principal. That is your amortization schedule. You get that at closing. So if you want to say, hey, you might say, hey, I want to pay this off in 15 years instead of 30. This kind of breaks down how you can do that. Okay. Okay, and these are some of your closing costs. Your loan interest, your loan fees, interim interest, that's usually from the day you close to like the end of the month. Homeowners insurance, you guys pick your own homeowners insurance. Whoever you have your, who is it? Whoever you have like a car insurance or rent, you might want to go with them first. They give you a discount. Your escrow reserves are in there. When you close, they're going to put money aside for your taxes and insurance to make sure you got enough in there. So when it comes due in December for your taxes, you have enough in there. Title related fees, the title companies do have fees, and the title fees are important. It's making sure your deed gets recorded. The most expensive fee is, I can't think of the name, it's title closing. I can't think of what it is, what they break it down to, but they want to make sure there's no lien against that property. Somebody can have a lien against the house. It's not on the credit report, well, it's definitely not on yours, but it's not marked anywhere. Nobody knows about it. And what I mean by lien, let's just say you got a seller who's going through a divorce or has been through a divorce. And before he sells the house or she sells the house, they got to pay their spouse off before they can sell it. Well, some people might say, I'm not going to say nothing. Okay, right. But it's a lien against the house. When the title company runs the title, that lien will pop up. I've had deals, not that many now. I've had a couple of deals that was delayed because the seller said they forgot they owed X, maybe they did, I don't know, but they weren't closing until they got that taken care of. Okay. The appraisal, we're going to make sure, or all lenders going to make sure that what you're paying for that house is worth it. If for some reason you're buying $100,000 house and it only comes back for $92,000, in order to close, two things got to happen. Your sellers got to your sellers have to lower that cost, or you have to bring in an additional $8,000 to make up the difference. And why would you want to do that if the appraiser had already said the house is not worth $100,000? So if the seller does not drop it, then that's a dead deal, honestly. Okay. And it doesn't happen very often, but it can. Okay. And your mortgage insurance is your private mortgage insurance. That's in your, basically in your FHA loan and conventional. That's the bank fees. Okay. All right. And here are some other loan fees. Your loan application fee, credit report fee, your appraisal fee, processing fee. We don't really have that. Our fee is basically whatever the loan origination fee is combined. Your underwriter or administration fee, loan origination fee, points to reduce your interest rates. These are fees that are broken down, that's on your loan estimate, and that will be on your closing costs. Okay, applying for a loan. Discuss your loan options and fees. Like I say, figure out why you're doing a certain loan product. Review all information with your lender. And I know sometimes when you go in there for the first time, it could be mind-boggling. If you're like me, when you do something for the first time, you cannot think of one thing to ask somebody. But as soon as I leave that office or get off that phone, it just come running back to me. So what? I call back and ask questions. Okay, that's what you should feel like you could do with your lender. Or I email and say, hey, I forgot to ask you, blah, blah, this. Nothing wrong with that. Agree to the terms of the loan. 30 years, you're doing a fixed rate. You're okay with doing an FHA. You're okay with doing a conventional. Basically, now sign the application and loan disclosures. This right there doesn't really happen until you have a sales contract. It's only a couple of paperwork you have to sign. Maybe you might have to sign if we have to do a verification of employment. It might be a form you have to sign. Provide copies of required documents. Like I said, keep your pay stubs handy, bank statements, taxes. At least try to have, if you're doing a loan application in 2021, at least try to have at least your 2020 W-2s. You just got them in January, but a lot of times people just don't keep up with their paperwork. But it's good to have it and just keep it ongoing for a while until you close, because you might have to submit updated documents. Pay any front fees. Some people have you pay your credit report up front. Some people have you pay your appraisal. We have you pay, it's called an app deposit, but that's something that goes towards your appraisal before you close. And like, again, that is credited back to you. But let me back up for a second. We have to see that those funds has cleared your account. Okay, so if you write a check for $500 for earnest money, we got to see that it cleared your account. If you send me a check or do a debit card for $450, usually once they run it through, that shows right there it clear your account. But we have to see the funds guy clear your account, or they will not give you back that credit. Okay. Review your loan application, credit report, and all necessary documentation. Your loan processor and your underwriter is going to do that. We will receive the appraisal, the flood search, and the title work for review. They're going to verify your employment and income tax verification, confirm that all the information meets the lending guidelines. So when people ask me after we first meet or after we do a pre-qual, is that all you're going to ask me for? No, it's not. Okay. I try to get as much information that I think I'm going to need. But when you get to processing, she might see some things, or he might see some things that I miss, or they might check with the underwriter and they say, oh, you need to get this. And then when we get everything there, when you go to underwriter, your underwriter can call and say, hey, we want to see this or that. Usually, guys, it's not nothing that you cannot provide. If it's something that, I can't think of what it could be. If it's something that is not usual or abnormal, what I would try to do is talk to my underwriter before you go out looking. I can't think of something that was different that I wanted to double check with the underwriter, because I did not want any surprises at closing. I didn't want, wait till the last minute and say, oh, we need to get this. And my buyer be like, oh, I don't have that. What I'm trying to think, what is that can be last minute if you don't get it up front? Let me see. Bear with me. Oh, let's just say bankruptcy documents. When I see that somebody had a bankruptcy, even if it's discharge, I would tell them, okay, send me a discharge letter, and depending on if it's old, they may not have their bankruptcy. If the bankruptcy is still on your credit report, they may ask you for it. I let my borrowers know, hey, you should go ahead and get it. If they say, hey, I can't find it, I don't know where it's at, the first thing I say, you need to have it. I'd rather have it did not need it, or wait till the last minute and you try to go, can't find it. If you filed a bankruptcy in St. Louis City, you go to the courthouse for the bankruptcy department, and in St. Louis County, the same thing. You can get copies. I think you have to make the copies, but you can get copies. But that's something I like to find out before I tell my customers beforehand. But I was just trying to think was something abnormal that's something that I will go to an underwriter for. Can't think of it right now. But usually if it's something I'm not sure of, I will go in and say, can you look at this file because of so and so and so? I just want to make sure, what would you ask my borrowers for to give to you? Oh, I know what it was. I had a situation where I was doing a refinance, but very important, not everybody reports to the credit bureau. The lender they were with was not reporting to the credit bureau, and I dealt with this lender before, and I know what they were saying was true. So I told my underwriter, I said, what do you need to show they've been making their 12 months payment on time? And she said, just have them get a letter from the mortgage company saying that. And that's what she worked on, and she got it. So it's like things like that. You try to get that in place before people find a contract. Even though it was a refinance, as soon as we met, that was the first thing I asked her for so she could get it. And she got it like in a week. Okay, so that's something. I think we did everything on that. Okay. Okay, reasons for a decline loan. Like I said, if your loan is declined, whoever your lender is, they should explain to you why it was declined. Debt to income ratio, you want to do 150, it was too high. Your debt to income was too high. You was past the grace period. And you're determined, hey, I want that 150. Okay, well, I can't go any lower. It will be declined because your ratio is too high. Employment history. They really look for a 2-year work history. They do know people were furloughed or laid off because of COVID. We just asked for a letter of explanation about that. But if you have been off, let's say you haven't worked in 4 years and you got a year history, you might not be able to get approved. But if let's just say you on your job for a year, but you was in college last year and you graduated and you in the job where you went to school for, we can go ahead and do it. We would just need a copy of your college degree. Okay. Your credit scores. Like I said, the minimum score is 645. And if I can get a accept on a computer, guys, which is a desktop computer, meaning that if the computer system accepts everything, we may could do like a 641 or 642. Okay. But what I would find out is before I have you go look, and I'm going to ask the underwriter if that's okay. We're looking at collateral. Okay. If you might be trying, like I was telling you before, you're trying to get a $300,000 house, but you don't have enough assets and reserves, you might not be able to get approved. Insufficient cash to close. Remember I was saying earlier, when you get ready, somebody had asked a question about down payment, but when you're getting ready to close, that is not the time to ask for down payment. If you think you want down payment or you need down payment to close, bring that up front. Okay, let's find out if your lender has grant money. I can count. I know it's been a lot of people have gone to other lenders. They're approved for other lenders, and that lender didn't have grant money. They didn't ask for it. And one of the things that I kind of was questioning was if that lender didn't see they had the money in their account, that's when it should have been brought up too. Because sometimes people not do loans, people might come in, they do not have the $1,000 in reserve at the time that they doing the loan, but they have the credit. So what I would do is I would put in enough money to see if I can get it approved. And I get it approved, but I am letting people know, hey, you were short $1,500. You've got to have that in there before you can close. So they'll know exactly what they need to do. Unverifiable information. If we try to do some verification, just say work, we can't verify your work, or you're self-employed, we can't verify where the cash is coming from. If they can't do verification, and like the gift funds I was talking about, if we can't verify that funds, it can go for them, depending on what's going on. Okay. Credit application is incomplete. You've got to fill out, well, when they say complete, you can have no credit, or you can have one credit score that's high, but I'm trying to think of the other ones. The other two is very low, something is going on. So that could be what they consider incomplete. Your mortgage insurance is denied. Now that is a very tricky question, guys. And that unfortunately is something you would not know until you have a sales contract. I've only had one instance where that happened, and that was because the mortgage insurance I was going through, my customer had a bankruptcy. They were out of it. It was completely out. They were doing a short sale, and I'll explain what that is. And it took them like 6 to 8 months before they closed, but their credit score shot up. I mean, it was good. So I changed them to a conventional loan. But to make long story short, the mortgage insurance company that I went through did not want to do it because they had a bankruptcy. So needless to say, we found another mortgage insurance company that was able to do it. That was, I mean, we honestly, yeah, we lucked out. That was something that was unforeseen. But usually before we get that far, like I said, that was just something that was very rare. But usually when we get that far, you can kind of tell when a mortgage insurance won't accept it, because usually you can't get approved. But like I said, that was one little major issue, but we were able to move that loan to another insurance company. And the mortgage insurance, again, is the private mortgage insurance that the bank gets. Other credit changes while in processing, title issues, cannot obtain a homeowner's insurance. Only had that happen once. Sometimes it's very rare people can obtain a homeowner's insurance. If you did a lot of claims, and I guess you're saying, well, if they first-time home buyers, what kind of claims? Rental insurance and car insurance. If you had a lot of claims, that can be held against you. Okay. Title issues. Now, like I was saying, on the seller side, a lien came up on their side. It can come up with borrowers every now and then. It's not on the credit report, but it may be on their title. It could be like a tax lien. If you had some personal, and even though you're not a homeowner, people have personal taxes that they get liens against, meaning that they never pay their personal taxes. Okay. Credit changes. One of the main thing I tell my customers, yeah, here's your pre-qual. Do not change your credit. Do not open up any new accounts. Don't have anybody run your credit. Again, if your Sears card was $200, don't make it $200, because what? They're going to run your credit before you close. Always happen. You could have the highest scores, 800s. They will run your credit. It's a given. So I just tell people, that's why I tell people, no matter what the scores are, the same thing, because it applies to everybody. And I think that's it, guys. And then you're right as a consumer. I'm sorry, hold on. You're right as a consumer. You have equal credit opportunities. You think somebody's being unfair or not telling you something correctly, you can report that. The truth in lending requires a loan estimate. We have to get certain documents out to you once you get a sales contract, and believe me, they make sure we get that out. 3 days of application. That's if you have a sales contract. They don't consider you a true application until we have a sales contract. But a lot of times, guys, my customers come in before they get that. And that would be, and we'll call that TBD, to be determined, meaning that we have not got a sales contract yet. And then your LE, which is your loan estimate, and your closing disclosure give you information on terms and costs associated with the loan. That breaks it down. So I think I am done unless anybody has any questions. And let me go through here. No questions? Okay. I want you guys to see this. This is my contact information. If by chance you got any questions or you think of something, please feel free to call me, and my email address is on there as well. My office direct number is 314-835-3746, and my email address is sharon.johnson@centralbank.net. Anybody got any questions they want to shoot up or any concerns? Quiet bunch.
Okay, well, if that's it, then we're done. Well, thanks everybody for coming tonight. Have a good night.
Good night.
Thank you. Have a good
Thank
night.
you.
Thank you.
Thanks, Sharon.
Thank you. Okay. Oh, I can't believe the guys were quiet.
Yeah, they were quiet.
Yeah, I hadn't even given them a chew bone.
Your dogs did good.
I know. They probably were so shocked when they went out there and it was snowing. Oh, okay.
So if you just
Okay.
stop sharing your screen. Oh, I need to stop recording.
Okay.
Stop recording. There we go.